about headed into Friday. Of course, markets waiting for Ben Bernanke's speech. We keep hearing the possibility of QE3, more monetary easing, yada, yada, yada. And I say that because, again, I've seen no analyst confirmation that we will see some kind of monetary easing. So on that note, I just wanted to take a quick peek at some inflation plays other than gold to see if there's some trade leading up to Ben Bernanke's speech on Friday. Most obvious, of course, is the TLT, the 20-year Treasury bond, up about 10% since the Fed officially announced QE2 last November. Can we look at the chart? It's probably the opposite of the spiders, right?
Right. This has had a big run as the market had a big decline. And I'm seeing the same type of pattern here I saw before some of the equity situations started breaking down. So, patterns repeat themselves, obviously, in a different scenario. If you look at the TLT, massive run. This was your breakout area when it went above 98. That's when technically you should have got involved. Then it started getting a little erratic here before going again. And now you have an upper level flag. Typically, upper level flags are prone to failure. If it stays intact, people buy it for momentum. But once it starts to break, I would think you need an upper level stop that, at this point I would get out if you're in a tier 2 or tier 3, get back down to a tier 1, and this can easily fill this gap to 108.50 and come back and come to 106. So just be careful here if you think that it just can't go down because it's had such a huge run. But the trend isn't broken yet. I would just take some off the table there.
And I wonder if traders might be shorting this headed into Ben Bernanke's speech if we don't get some kind of QE3 and the dollar rallies?
A lot of traders are doing a lot of different things with this. A lot of big hedge funds, they hedge with this. Some people just trade it. A lot of people do different things. I'm just looking at it from an active trading mindset. And right now, if I was trading it for more momentum, that day yesterday would tell me some momentum left, and I'd be a bit more careful.
All right, let's go to tips. Inflation-protected securities up not even 3% since Ben Bernanke announced that QE2 last November. Which, I mean, we're going to get to gold in a second, comparing gold, which makes me think that gold's moving on things other than inflation as well. But tips. Does it make any kind of good trade? Is the chart telling us anything about Friday?
Let's take a quick look here. Oop.
Oh.
Whoa, what just happened with the tips? Hold on. Did I put
tips
the wrong?
Got crazy.
Did I put the wrong?
TIP?
Yes, I just did that. Okay. Anyway, well, we'll get away from that.
No S on the end. No S on the end.
Oh, my bad. Sorry.
We'll get there. We'll get there.
Okay,
it's Wednesday. Here we go.
Yes, that shows you how much I trade these because I really don't. But what a chart's a chart. And if you look here, this also had a decent move. Look at this day. This was a day that closed on the highs that got trapped with this bearish day. Went sideways, tried again, trapped, and now it's breaking below this little support or uptrend or whatever this nice little support has been. I would be getting out of the way here because this is getting choppy. And if this was a stock, I would say be very careful. So I'm just looking at the chart. I'll say the same thing. Be a bit careful here. You can easily see a move down to the 114 area.
Interesting. So that might be pricing in a lack of more monetary easing. Okay, let's go to gold real quick. The GLD. Want to see how that's holding up after yesterday's very dramatic sell-off, which, by the way, accelerated when the earthquake hit, too. It's sort of like, what, just dump gold and run or something at that point?
What was important yesterday is we talked about, whether or not the equities can get a big push. Look for gold. Gold was down $8 to $12, and we're like, you know what? It's only down $8 to $12. It really doesn't mean anything. It needs to be down $30 or $40 in order to get the equity market a little bit of conviction to the upside, and that's what we saw yesterday. It was the first potent down day in a while, a day to take notice, a day to punish people who were chasing the move. It doesn't mean it's game over there. All it means is that, we could pull back to the 8 or 10 day, sort of like we did here. But the question will be, does this change? Here we had a nice little extended run, pulled back, went again. Here we're from higher. This pullback was a bit more potent than this. This took 2 days, this took 1. So I would watch the GLDs and watch this 175.55 area. If this weren't to hold and it starts to get down to the 21 day, you'll know that the composure changed and you can't just buy every dip in gold for now.
And it's interesting because you think that gold might be a win-win either way come Ben Bernanke on Friday, because if there is more monetary easing, obviously inflation might kick in, so then gold goes higher. If there's no monetary easing, people get freaked out, they dump stocks, they go to gold. So I wonder if it's kind of a win-win either way.
I hate win-wins because win-wins make it sound like it's too easy. Yeah. You know what I'm saying? We saw, what was it, the front cover of one of the magazines that the GLD took over the spiders. That's always an indication to sell some. We've been talking about just being in tier 1.
And then we had that big sell-off, so there you go.
Exactly.
Really quick on gold. I just wanted to ask, and now I totally forgot my question. Never mind. We'll move on. All right, we'll get to that in a second. It's Wednesday. So let's move on. I want to touch other safe haven plays. These aren't necessarily inflation plays, but kind of stocks and that provide services that people will buy no matter what. Cigarettes and alcohol. And if you look at, say, the Altria and the Philip Morris, they also have huge dividends. I mean, Altria is like almost a 6% dividend. Do you think these make good trades at all right here?
I haven't looked at them, but that thesis has been floated around Wall Street. So let's look at the charts. You look at what MO first. This actually looks pretty good. It's holding above some of the moving averages. It's coming in to a downtrend, which it might try and break above. I'd say this is in the game if you're looking for that type of stock. As long as it stays above, this 25 area, looks like it's showing relative strength.
Now, if we go to some beer stocks, obviously just because, we saw Heineken today got really hurt on second quarter estimates. Obviously, as inflation kicks in, we have higher input costs. But it doesn't mean that they might not make good trades. Boston Beer Company was up almost over 7% on Tuesday, had a really big move. Do these make good trades, especially ahead of Friday?
Well, Sam Adams is my favorite beer. So
for Scott, yes.
I'll take a quick look. Sam right here. It might be my favorite beer, but it's not really showing any relative strength. Yes, it was up yesterday. It's got a lot of resistance to deal with in this whole area. I guess this would start looking better if it started to clear this area, but to me, this isn't showing me anything special.
And real quick, can we go to TAP? It's one of the strongest dividend players. It's Molson. I just want to see if that chart's holding up any better.
Molson? Who drinks Molson? Anyway.
That's why they provide the dividend.
There you go. Yeah, you need to be... Anyway, here we go. This actually looks a little bit better. I would say it's putting in a little bit of a support here around 43. If it were to start getting above this little descending channel here, or trend line, whatever you want to call this, it could get better. This also is below the 200-day moving averages. I don't see anything special here as well.
All right, fair enough, Scott. We will be right back with more trades right after this.